Hello, everyone. Good afternoon. Today on the final bar, I'm joined by Katie Stockton from Fairlead Strategies. We're going to talk macro themes. We've talked up until today about weaker dollar and stronger everything else, everything been in an uptrend. Today, we get a bit of a reversion after the Fed meeting, coming out with comments today and inspiring the markets to sort of reverse. So stocks down, gold's down, bonds are down, the dollar's a little stronger. So what does that mean for the long-term trends? What are we seeing going forward? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close for the show as we try to make sense of these markets using the lens of technical analysis, behavioral finance, sentiment, breadth, all those tools that we can bring to bear to try to make sense of how the markets are evolving. And as I mentioned just in the quick introduction there, there's a bit of a reversion to the mean day today with most sectors down, all the 11 sectors looking like they're going to finish down for the day. The S&P finishing lower, coming off just dusting that 3,400 level, making a new intraday high today, but then coming off and closing down at the lows for the day. So, the Fed meeting came out today with the minutes, and so I think immediately the market started to come off the previous highs with implications about a longer recovery and what that would mean. It's interesting. My guest yesterday, Jesse Felder, and I were talking about, the Fed's ability, the liquidity challenges, and the Fed's ability to prop the market up for the long term. And today certainly felt like we were getting a bit of what Jesse was hinting at yesterday. Now, coming up on the show, we have some wonderful guests. I mentioned Jesse Felder yesterday. Excited to talk to Katie Stockton here in a little bit. Tomorrow, on Thursday the 20th, we have Samantha Leduc from Leduc Trading. Coming up next week on Tuesday the 25th, Roman Bogomazov. He's an expert in Wyckoff analytics. And then on Wednesday the 26th, we have Doug Bush from Chart Smarter. Also, just wanted to announce, coming up on September 22nd, we're going to be doing a launch event for the new StockCharts ACP platform. This is our new, rich, dynamic, interactive charting system that sits on top of all the other great tools that we have on StockCharts. It's called ACP, the Advanced Charting Platform. And if you've not checked it out, at the top of the screen, you'll see a little link that says go to StockCharts ACP. Definitely check it out. On September 22nd, we're going to introduce you to a lot of the features and a lot of the people that have been involved in improving that platform over time. Let's get to our market recap. And as I mentioned, there's a bit of a reversion here, a bit of a mean reversion, meaning things that had been stronger started to weaken, things that had been weaker starting to improve a little bit. And this really came toward the end of the day when you saw this big rotation after the Fed minutes came out. So the S&P finishing around 3375, the NASDAQ 100 pushing down a little bit further. Small caps actually look like they're going to finish just above flat for the day. Obviously came off pretty good and finishing more toward the low point, but and had been up pretty significantly earlier on in the session. The VIX back up, teasing the 23 level. At some other asset classes, as I mentioned, pretty much everything rotating lower except the dollar. So the TLT, the long bond ETF, down 0.6%. The dollar up 0.8%. It really accelerated through the course of the day. I'll get to a chart from my friend Matt Maley in a little bit here. And then finally, looking at precious metals, gold and silver coming off both up down over 3% today, with commodities finishing just below flat. Looking at a chart of the S&P 500, we've talked about this general thesis for a while, and I'm I don't feel incredibly validated by one day and a couple hours, but overall, I think it's fairly reasonable that you would get at the very least a pullback, a noticeable pullback off of a key level. Most topping patterns or most significant highs, when you have a sell-off from there, you usually experience at the very least a pullback when you retest those highs. That's pretty common. Even if the long-term trend is positive, even if we eventually, we close the year at 4,000 or something outrageous to the upside, reasonable to expect that we would get a 5 to 10% pullback from these levels. So the base case we've talked about, I think, is a pullback to around 3,200 to 3,250. That's the blue shaded area here. That would pull us back to that July low, and I think, at this point, we've pretty much established the uptrend. I mean, at this point, everyone recognizes that stocks have gone higher and have the potential to certainly continue to go higher with breakouts we've seen in a lot of different stocks in a lot of different sectors. So what would satisfy everyone is a pullback right around to those levels, to the 50-day moving average. If you're bullish, that's a reasonable pullback within the uptrend. If you're bearish, that could be the beginning of something deeper. And I think what we do around that key support level will be very, very telling, because if we start to break down through that level, break down through the 50-day, down through the previous lows, I think people start to get nervous and worry about the potential for further downside, and also worry about, arguably the Fed's ability to continue to prop the markets higher. If, however, we pull back there and turn just as you'd expect and rotate back higher, that could be just filling filling up the momentum and preparing for the next big leg higher, going up to S&P 3,600 or whatever upside objective you feel is most reasonable. So that's where we're at the S&P today. We're pulling off a little bit off of that 3,400 level. We've not closed above there yet, but we have made a new 52-week high and a new 52-week closing high relative to February, which is certainly noteworthy. Let's look at some other themes that we can determine from today. So financials, the number one sector, essentially finishing flat, but up earlier in the day for sure, followed by technology, communication services. Now the XLF we've talked about as being one of the weaker sectors on a relative basis, testing new relative lows. Today certainly didn't follow through on that, as it's holding up better than the S&P. But overall, it's been one of the tougher parts of it. It's interesting to see stocks like Schwab in the top 10 gainers list, looking at the scooter reports. So it popped up a little bit. So again, there are pockets of opportunity. ETFC is E-Trade. That's another financial stock within our top gainers on the scooter rankings. So there are some opportunities. Morgan Stanley on here as well, I'm noticing. But overall, again, the question is, as a sector, how is that holding up on a relative basis? On the downside, we have real estate leading the way further down. Energy, consumer staples, and consumer discretionary, both on the bottom 5 for the day. I did notice actually Gilead in one of the bottom 10 performers relative to the scooter rankings. So when you think about Gilead, we've talked about the IBB, we've talked about the relative strength on some of these biotech stocks, and how the group overall has rotated on a relative basis from an uptrend, a cyclical uptrend, to a sideways trend, to a downtrend, making a new swing low based on relative strength for the last 5 or 6 months. So there's this rotation from an accumulation phase, a consolidation phase, and arguably a distribution phase. IBB, the biotech ETF, now making a new swing low, retesting the 50-day, and again, I think breaking that 132.50 and continuing this pattern of lower highs and lower lows would be a bit of a concern. As we've talked about before, with stocks like this or with ETFs that have pulled back, this is kind of a reasonable pullback within a longer-term uptrend. If you think about the shorter-term cycle, I think the RSI and seeing if it remains above 40 on future pullbacks would be an interesting indication. Could help you understand if it's the beginning of something deeper, or if it's able to remain in that sort of bullish range overall. In terms of group themes and anything else we can dig out of today, interesting to note some industrials groups in the top 10, trucking and delivery services. Within consumer staples, you have distillers and vintners in the top 10. Footwear, which is like Nike's group, is in the top 10 here. Recreational services as well. Also some transports represented in the top 10. On the downside, you have apparel retailers, retail REITs, so a lot of things related to retail there at the bottom. Also mining and gold mining stocks. We've talked about Newmont Mining just as a representative of that overall play, and overall holding up okay on a relative basis. It's really been flat for a little while, but again, with a lot of these stocks that have pulled back, in this case, pulling back to an ascending 50-day moving average in the context of a longer term uptrend, a lot of times that represents sort of that buyable opportunity, right? Sort of buying on the dips within a longer term uptrend, but seeing if it breaks down through some of those swing lows. Right now, you've got pretty clear support around 62, 62.50. That's the 50-day and the previous low there from a week and a half ago. That's where I'd be looking to see if it's able to hold that sort of level on any further weakness through the remainder of the week. Just to finish off our recap, I wanted to look very quickly at the Mindful Investor live chart list, just checking in on breadth. You know, it's interesting to know we've talked about the breadth characteristics remaining positive, and in general, what I'm looking at is what is the trend on the S&P 500? What are the trends in the cumulative advanced decline line? So this is New York Stock Exchange common stocks only. This is the S&P, so large caps, mid caps, small caps. And they're all color-coded green, very simplistically, because I've seen them all rotate above their June highs. What's interesting is after doing that over the last week, you see the small cap breadth, mid cap breadth, common stock only breadth, all sort of rotating lower. This is just in the last couple of days. So it's too early to say this is the beginning of something much deeper, but it'd be interesting to see if we continue to see deterioration. You can see how it gets worse the further down the cap tiers you go, and sort of the conventional wisdom is you'd see internal weakness from small caps and mid caps before it would be reflected in large caps. That usually is the last to reflect some internal weakness. And you saw that back here in January and February, where the advanced decline line for the S&P went higher while all the others failed to do so. So that's something I'll certainly continue to be keeping an eye on. I would be paying attention to that as well. Last thing I wanted to point out here, it's actually in our breadth look. Hold on, here we go. Breadth, here we go, advancers, decliners. I just wanted to note out, so what's happened in the last couple of days, today the market finished lower, and you can see 2 out of 3 stocks were down on the day. That's similar to what we saw yesterday, which was a new high. So we've had 2 days now with a new 52-week intraday high, and both of those, over half of the S&P has been down on the day. Half of the New York Stock Exchange has been down on the day. So as the market's trying to move higher, the breadth is actually just in the short term kind of underwhelming. So it's not telling you that this is a bunch of stocks really dramatically pushing to new highs. Even though I'm seeing the headlines, new closing high for the S&P, this is fantastic. For me, I'm seeing characteristics that point to this being a retest of a February high that speaks to short-term weakness. And again, I think that is almost without question, although I hesitate to say that, I think it's reasonable that you'd expect some pullback here. And the question is going to be, what's next, and what happens when things sort of back and fill and we reset any potential long-term uptrend. That's our market recap. I want to take a quick break, and we'll be back with my guest, Katie Stockton. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We'd love to hear from you. Get your questions on what you're struggling with as you're using the charts, approaching these markets, trying to make sense of your portfolio and how to adapt it to where things are potentially headed. 2 ways to get questions to us. One is via email. Just hit us at thefinalbar@StockCharts.com, or on Twitter, tag us in a comment at FinalBarSCTV. Anywhere you see our content on YouTube or elsewhere, just put a comment below the video. We'll capture all of those. We'll do another mailbag segment at the end of the week, and we'd love to answer one of your questions live on the air. I want to welcome on my guest back to the show, Katie Stockton from Fairlead Strategies. I've known Katie and her work for a number of years. We've served on the board of the CMT Association together, but enjoyed very much following her work when I was on the institutional buy side. Always appreciated her perspective on what she was seeing. So Katie, welcome back to the show.
Thanks so much for having me, Dave. Appreciate it.
So as I was mentioning, obviously, as you're familiar, the S&P sort of testing all-time highs, teasing the 3,400 level. We have a chart here of the S&P, which is the daily MACD. Can you give us a sense of how you're approaching things as we're testing all-time highs here?
Well, I do think teasing is the right word. It feels like it's been several days that I've used the word flirting in my own work. It's the S&P has indeed been flirting or teasing with that high, which is about 33.94 from February, and
Yeah.
that is, of course, final resistance on the chart. And I think because it's been hovering right near there, that's why the new all-time high registered yesterday was somewhat underwhelming. Now, of course, we have a little incremental decrease in momentum, and you highlighted some breath gauges as well as those highs are being tested. That's very normal. Resistance is resistance, right? It's where
Mm,
it's a natural place to get into some consolidation typically. However, I would point out that that MACD in the bottom window that you have does still reflect positive short-term momentum. So even after
yeah.
today's week close, it's just barely on a buy signal, but it is still on a buy signal. So we tend to defer to the momentum behind the market these days because it's been the right thing to do, right or wrong, whether you can make sense of it or not. The momentum certainly has been there, and it's been right to stay on the same side of these indicators.
Right.
Our thought is that we could see new highs, maybe a little bit more incrementally higher from here before a pullback. And we say that in part because of market sentiment. Sentiment has certainly been another driver. We look at things like that fear and greed index. It
Mm,
did reach contrarian levels or overbought territory last week, reflecting what they call extreme greed. And it does tend to peak a few weeks ahead of minor peaks in the S&P 500. So that's like an early warning signal that we're keeping an eye on. However, even as it stands right here with new highs within reach, it's still below that threshold yet again. So we're watching that gauge closely as well.
No, it's interesting because, as I mentioned earlier in the show, we've had this situation where it feels like everything's going up. It's this universal uptrend with stocks going higher, even global stocks going higher, gold, precious metals overall doing well, bonds going higher. I mean, everything seems to be in an uptrend. We're looking at a longer term chart of gold here, and gold and silver especially, right? Sort of went vertical and then had a bit of a reset over the last week, coming back a little bit, but now sort of retesting. What's your perspective here? If you're thinking about stocks testing all time highs, how do you relate that to what we're seeing in precious metals?
Gold and silver have obviously seen positive long-term momentum and now major breakouts to new highs. So I'm a big believer in breakouts, irrespective of the driving forces behind them. They do tend to add to the momentum behind an uptrend. And indeed, I think that's what we've seen for both gold and silver prices from a long-term perspective. You have a nice log chart up here, so that really shows that big rounded base in gold
Mm,
prices and how it exceeded that final resistance from 2011. If you create a measured move projection based on that breakout, it can get gold to about 22.85 per ounce, which of course would be a nice gain from current levels. Short term, there does appear to be room for more consolidation. It's very natural after the steep up moves that we've already seen in those precious metals, but I think it's something that we look at as sort of a pause to refresh the uptrend and also an opportunity to take advantage of the breakouts. To the point on how it relates to the equity market, well, I think we just treat it as a standalone asset class and not think of it
mm,
as defensive or otherwise, because it doesn't always trade that way. So these
mm,
correlations that are sometimes the stuff of textbooks and otherwise, they aren't really that reliable, especially in a tape like this where the drivers aren't normal, so to speak. So
right.
I think we really want to defer to momentum and breakouts and keep it simple in that regard.
It's such a great point, and it comes to my conversations with Bob Prechter, and whether or not you buy into the Elliott wave methodology and socionomics and all of that stuff. What Bob has spoken of is, not to think too simplistically about the relationships between things like stocks and gold, because for every opportunity, or every example historically where they've moved separately, moved against each other, there are other times when they've moved together. So it's best to just focus on the trends, which I think you made that point really really well.
Yeah,
What?
no, that's true with the dollar as well. And you
That's
can
right.
look at dollar and gold and you have a supposed feel for that, and yet it just
Mhm.
doesn't always hold true.
No, we only have a minute left, but as we think about the S&P and potential for, a pullback or something like that, the question is leadership and what sort of rotation we may get. And there's been a lot of speculation about do we get a rotation into, more into industrials, into financials, even into energy, things that are a little more beaten down versus something like tech that's been sort of the long and strong outperformer? This is the chart of tech going back for the last year with the relative strength at the bottom. What do you see now with the trends, and where would you be making bets going forward here?
I'm a big trend follower, and the trend behind technology in absolute and relative terms is higher, right? So we have a absolute chart here of XLK, or the technology spider, and then a ratio versus the S&P 500, both of which are trending higher and really show no major negative divergences. There are no sell signals in my work for either measure. So I think we assume that this uptrend will maintain its hold, even if it suffers a slight loss of short-term momentum during a future pullback, until it proves us otherwise, until a trend reversal occurs or there is some kind of big overbought sell signal. The value rotation that we've seen, to me, is something that people get hopeful around, but it's often fleeting because these prevailing trends favoring growth are very, very strong, and not something I'd really want to fight, like I said, until we see a real reversal.
So indeed, the trend is your friend in this case, as always. Katie Stockton, thanks so much for coming back on the show. It's good to hear from you. Hope you and your family continue to stay safe, and we'll keep in touch, all right?
Thanks so much.
That was Katie Stockton joining us from Connecticut. She runs a firm called Fairlead Strategies, and I followed her work for a number of years. I think she has a great just macro thematic perspective on what's working. And if you took anything away from that, there's a lot of great insights in there, but I hope the main thing is her comments about focusing less on what should happen. Gold should go down because stocks are doing ABC or whatever. Focus on the trends, focus on the momentum, focus on what's working and what isn't. And I could not agree more with that sentiment. Our next segment is It's All Relative. What we want to do occasionally is focus on relative strength. As you know, on the show, we focus on relative strength a great deal. But what I wanted to do just for a few moments is focus on some of the stocks that are really outperforming on a relative basis. Katie's mentioning technology and just thinking about growth versus value and where the opportunities have been. I ran a screen just for stocks in the S&P 500 making new 13-week highs in the last day. So these are stocks that have again, it could be something continuing in an uptrend. It could be something that has been beaten down and is just rotating with a new price high for the last 3 months. But this is a list that I like to review regularly just to make sure I'm familiar with the things that are breaking out or in a significant uptrend, and just respect where they're at and where the trends have come from. So here we're looking at the results. I'm sorting it by sector. As you can see, 28 stocks as the time I ran it just before the close here. Looking for stocks making new 13-week highs. Probably not a ton of surprises, but a couple of them that actually were interesting when I looked at the individual charts. So again, starting with communication services, going into consumer discretionary, you can see a bunch of names within the consumer space, and not just consumer discretionary, but staples as well. Handful of healthcare, including pharmaceuticals like Johnson & Johnson and Merck. And Merck is actually a chart we'll hopefully get to and focus on. Freeport-McMoRan, when I'm looking at charts that are impressive and starting to rotate higher, FCX certainly would fit the bill. Let's go very quickly through a couple of these charts and just highlight some of the key names in here. As we go on, Twitter is one that I'm sure many of you followed. I think it's worth noting the relative strength, which has not quite made a new, 9 or 10 month high, but very, very close to doing so. And if you look at the uptrend, it's just sort of continued unabated, testing those February highs as with many other things. But you can see what's interesting here is it tested it first the third week in July, has now rotated back, and you have this little handle here to make a cup and handle like pattern. I think a break above 40 would be a really significant breakout for Twitter. AutoZone's another one in there. Best Buy is an interesting chart to look at because this has essentially gone vertical. You can see the extreme overbought condition and the relative strength that has gone up. This is a stock that's outperformed the S&P by almost 50% over the last 12 months. And coming off of the March low, it's 50% up since the March low in March 23rd. So it's really accelerated out of the lows. I find a lot of people are wary about buying stocks that are in uptrends like this. What I would remind you is, what Tom Bowley and many others have said, if you want to outperform the S&P 500, you need to own stocks that are outperforming the S&P 500. That's why we're highlighting this chart with strong relative strength, extremely overbought, which usually means for me, you'd expect at least a bit of a pullback at some point, but overall the trend remains quite positive. Home builders we've highlighted in recent weeks, they've been in strong trends. DHI is an example that popped into this list today, and you can see, again, continuing to make new price highs this week. Overbought, and again, that's okay. Overbought means up a lot. You'd expect a bit of a pullback, but there are times like here in June where an overbought condition, a bit of a pullback is totally reasonable before you break to new highs and continue further. But I like stocks that have been outperforming consistently. I'm going to just skip and jump a little bit. Interesting to see Lowe's. This is Lowe's and Home Depot are two charts to pay attention to. Lowe's here. Interesting, the last couple days have finished more toward the lows of the session. And while that alone isn't a sell signal, just a short-term thing to pay attention to. When something's in a longer-term uptrend on a candle chart, these would be sort of large, solid candles, which tells you usually a little bit of a change of characteristic of the trend. So I think it's an interesting chart to watch coming out of an overbought condition. But overall, I think the long-term trend remains very positive. Nike, we mentioned how footwear was in the top 10 list. You can see how Nike has now broken above resistance above 105, broken above it, tested it as support, and I'm making a new 52-week closing high today. Target beat on earnings. You can see the stocks gapped up almost 13% to above 150. So this is certainly accelerated to the upside. Now is not the time when that should have hit your radar. I think when stocks like this break above their previous highs, like it did the first week in August, that's when it should hit your radar. That's why I'm looking at the new highs list, because new highs usually can often continue on and make much further highs from there. I'm going to go very quickly because I'm told we're out of time, but I just want to hit on one or two more. Within staples, I mentioned distillers and vintners is one of the top groups. Brown-Forman BF/B is one just making that new high. Sort of looks like Target before it broke to significant highs. Colgate, Palmolive, and Campbell's, also McCormick within that same group. Johnson & Johnson and Merck, maybe Merck is a better example of a chart that's breaking out. You can see how while other stocks we've been looking at are testing those all-time highs, Merck is actually just breaking out of this congestion range, breaking above its April high, but now has retested the 200-day, broken above it. It's overbought, which doesn't bother me a ton. That just means it's in a good uptrend now. And the relative strength just starting to break higher a little bit, which I think is actually a really encouraging sign. And then there was one more I wanted to hit, and then we're done. Which one was it? Freeport-McMoRan, FCX. I think it's interesting to see this is now broken above the January highs, retested that support level, now breaking to a new 52-week closing high, up almost 4% today, and a new 12-month relative high, which is what's most interesting to me. I think along with gold, precious metals, charts like FCX have a lot of long-term upside, and I think it's setting up very nicely this week for potential for that. That is our segment. It's all relative, hitting on stocks in showing strong relative strength characteristics. We talk about that often, but I think looking at stocks making new 13-week highs can be a good way to focus on that list occasionally. We need to wrap the show. Go to the 3 and 3 charts, 3 minutes. Here we go. Chart number one is the dollar. Katie Stockton was mentioning a little bit about the dollar, and I mentioned in the introduction, my friend Matt Maley from Miller Tabak had mentioned the dollar weakness and how it was oversold and in such an extreme oversold condition. Looking at a chart of the UUP, which is the dollar ETF, you can see this bullish divergence with lower lows in the price, higher lows in the RSI, and that supports what he was suggesting, which I think suggests short-term strength. I could see the long-term downtrend that Jesse Felder was talking about yesterday, but short-term strong, long-term weak is sort of my base case for this. Second example actually comes from on Twitter. Lighthouse Capital pinged this chart to me, and I thought it was a really good illustration. I mentioned EM, and his comment was, look, within EM, if you bucket it all as one thing, you don't get the full story. Here in pink, we're looking at just the Asian components of the EM index. You can see that's actually up 6% year to date. This is the Latin American component, essentially, of EM, and you can see that's down 33%. Look especially at that last little bit, just the last couple weeks. You can see in August an uptrend, a flat EM, if not a little bit higher. You can see the uptrend in the Asian markets and the downtrend in Latin America, and that's really, arguably why EM as a whole not doing better, because certain parts of it doing strong. And I think that's a really good point. I think if you oversimplify and just look at EM as one thing, you're throwing a lot of things into that one bucket, and very different economies, very different stories represented there. Finally, to wrap up the 3 and 3, just a chart of Coke. I think, going back to the basics and focusing on a stock like KO that has hit resistance a number of times, unable to break above that 48 to 49 level, unable to break above a descending 200-day moving average, and RSI topping out at 60, making new relative lows. Overall, that's the type of chart I would tend to want to underweight because I want things outperforming, not underperforming. Ladies and gentlemen, that's our show. Special thank you to Katie Stockton joining us from Connecticut and Fairlead Strategies, giving her take on the macro themes with technical analysis. Hit us with any of your questions, the final bar at StockCharts.com. We'd love to answer your question on the air later this week. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.